Morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today is Thursday the 9th. Just going to go ahead and bring up our high-risk investment warning. I'll keep this on screen for a few moments, and then we'll just bring up the commentaries disclaimer, and then we'll get into it. Hey Howard, morning to you, and thanks very much for joining. Yes, very well. Hope you are as well, and thank you to everyone for joining. Let's just go ahead. References, MarketScope 2.0, and we'll take a look at the CNBC morning note, which I haven't brought up. Let me just get that up, beg your pardon. Okay, here it comes. All right, let's just go through the CNBC note just to see if there's anything that in the press that we need to take note of. So, European stocks are expected to open in positive territory today. Investors are continuing to monitor developments around Omicron and look ahead to key US data. Global markets have rallied in recent days as traders bet that Omicron won't impact as severely as thought. All right, and there's clearly still some unknowns there. US stock futures were little changed during overnight trading, and that's after the major averages posted a third straight day of gains. The Asia Pacific market is has been mixed overnight, and preliminary evidence from South Africa, where the variant was first identified, may suggest that Omicron is milder than the Delta strain, but it's too early to conclude that, according to the WHO. Pfizer said that people might need a fourth COVID shot sooner than expected. This has come after preliminary research has shown that Omicron can undermine protective antibodies. The vaccine makers released results from an initial lab study that showed a third dose of vaccine is effective in fighting the Omicron variant, while the initial 2-dose vaccine series dropped significantly in its ability to protect against the new strain. This is going to be economic data out today. Investors will be keeping an eye on the latest weekly jobless claims data, and it's been the last 2 weeks has been really good. 2 weeks ago it was under 200,000, which is unreal. We just want to keep on monitoring that. We saw the participation rate tick up in terms of that NFP on Friday. No major earnings on Thursday. On the data front, Germany's trade data for October will be published, and Ireland's inflation data. Okay, cool. Let's take a look at the DAX. Here we go. All right, so with our weekly analysis, so we'll just start from the top down. We still have 2 days of trade to get through before we can confirm our 3 conditions here. At the moment, it's looking good. We just want to keep an eye on where the weekly close is relative to last week's high, right? And we'll only know that at the end of trade, at the end of the week. It's good to see, of course, that the RSI is pivoting upwards. We just need to see the stochastic follow suit towards this blue area here, and hopefully it can reach that blue area and maintain, and then we should get some positivity. If the closing price drops below this aqua horizontal, that's certainly bearish, and we run the danger of moving towards the red here, and for the RSI to not conclusively cross it above 50. But that's just, I guess, a warning to keep on the lookout for. At the moment, it's looking pretty good. What we need to do is go down to the daily. All right, so on Tuesday, we had this terrific move up. Yesterday was a very ordinary day in comparison, wasn't it? You can see that there was a huge emotional charge here. Yesterday was a down day, but a very small ranged down day. The fact that we've moved out of zone 3 into zone 2, I think must be seen as positive. And the bits of red that has appeared after a movement from zone 3 to zone 2, I think that in of itself is very interesting, because there's a potential opportunity here, a potential dip that we can try and exploit if it passes our tests on the hourly. So if we go down to the hourly here, we can see that we've got a 1, 2, right? That's the impulse. 2, 3, that's the correction. And now, so that's the correction. Now the next logical, I guess, development would be to assess if there's going to be another impulse. 1, 2, 2, 3, and is this the next 1, 2? And if it is, this is what we want to exploit. Let's just go over that again in terms of the theory, which I think we all know, but I just want to reinforce it. If we have some sort of longer-term bullish bias, then the short-term pullbacks become very interesting, because we know that prices don't move in a straight line. They tend to ebb and flow, and if we can identify the sort of the bottom of the correction, well, then we're in a good position to take advantage of the next movement up. So this is kind of where we are. We don't know if there's going to be a movement up here or not. We're blind to that. That's why we've got to look at it in terms of the longer term trend. In this case, the longer term trend is also not established. So because the longer term trend is not established, well, we're looking a level down, and we're looking at the sentiment. The sentiment has moved price from zone 3 to zone 2, okay, from the weak area to that neutral area. So there is an element of that bullish sentiment. And now, when we take a look at the hourly, it's now monitoring our triggers. So we've got one trigger that has been pulled. That's the stochastic, and of course the second trigger looks as if it's about to be pulled. We'll know that in the next 8 minutes. I think it will confirm, but it looks like there's going to be a trigger there. Of course, the first hour, as we always say, is very murky, very, very foggy, hard to get a directional bead in that first hour, especially we're wrestling with a central pivot. Assuming that we kind of get through that first hour, and we have the angle and separation with the exponential moving averages. And the next progression that we want to see is the movement of the stochastic to the upper quintile, to that 80, and that's really what's going to determine whether we are in the next impulse. So yeah, we'll see the triggers, but those triggers can give us a whipsaw type of signal, which we see all the time. But it's really when the EMAs get the angle and separation, and most importantly, in my opinion, when the stochastic hits that 80 and holds, well, that's when there's a real then there's real potential, right? So there's the stochastic hitting 80 and holding. There's the EMAs getting that angle and separation, and this was a terrific swing here. And now we've got this correction. And by the way, this correction is quite shallow, isn't it? It's not a vicious pullback at all. It's almost sort of a gentle decline to the S1 level, and it looks like the markets are now preparing themselves for another update, with the caveat that the stochastic makes its way to 80 and holds. Okay, so we've got this resistance to beat, and we'll know that sort of in an hour's time, and keep an eye on that hourly stochastic. So by and large, DAX is looking very interesting at the start of the day. Shadrach's just asked us to take a look at the euro US dollar. Just before I do that, any questions around the DAX, please go ahead and type those in. But certainly the triggers here are looking very good. The real test, as we know, is this. Okay, let's just go through to euro US dollar. All right, so we'll just do a top down here again. So we can see that there is a downtrend, a lower peak, lower trough, and we can even be more granular and put in the lower trough there, then the next lower peak there, and the next lower trough there, and the next lower peak there. So there's a series of these lower peaks, lower troughs on the weekly chart. The weekly momentum, you can see, is certainly applying a pressure to the euro. And we mentioned yesterday, just keep an eye on this RSI. It's very close to being oversold. So we're above 20 today. 20 is really kind of the beginning of the oversold. At 20 and below, we're starting to get, but we have a tendency towards being oversold here. So just keep that in mind. Let's go down to the daily chart, and all right, so the daily chart here, we're in the middle of the neutral area. A big push up yesterday in terms of euro US dollar. Just going back to the weekly, so that's when we looked at this oversold yesterday, it was on 20. The fact that we had a push up in the euro US dollar relieved some of the pressure here. The fact of the matter is, this is going to be a difficult trade to make, in my opinion, because it's lacking trend, right? We're in neutral. So it's probably one that's not going to appeal to me today, Shadrach. And if it goes into zone 1, then we're probably kind of getting into the area of maybe a little bit more here on the weekly. But I think once we get that, and this will be a squeeze, right? Because the market's would be net short here, so there'll be a squeeze here. and would kind of look to take advantage of the rally in a downtrend. So we're kind of in no man's land at the moment. Something just to add to this analysis is the US dollar. And we'll just take a look at the US dollar weekly. So the US dollar weekly is overbought, right? It's also tending towards overbought. So the dollar is, you know, there's an argument that can be made for a normalization in the dollar. Now, if there is going to be one, if there isn't going to be one, nobody knows, because markets, as we know, can overshoot. And of course, next Wednesday is the Fed. So then it is the Fed, and what sort of tone they come out with, I think, is going to have it's going to be a huge driver on dollar direction, which of course means it's going to be a huge driver on a euro US dollar. Ultimately, I am a dollar bull until proven otherwise, right? But the US dollar, to me, has been a really good measure of market expectation in terms of inflation, in that whilst the Fed had maintained the word transitory in its definition of inflation, the dollar didn't really acknowledge that and continued to rise in anticipation of a more permanent type of inflation. And that was effectively acknowledged last week, Tuesday, at the testimony by the Fed in front of the Senate banking. And now we've got this Fed meeting coming up next week, and it's just got me thinking, well, we have to be very careful here. This is going to be a very tricky central bank meeting, in my estimate. And the reason for that is because of a market phenomena of buy the rumor, sell the fact. Okay. Now I don't know if this is what's going to happen, but we all know this happens again and again and again because the market is forward-looking. So I think the market was always expecting a tighter monetary policy. I think we're on the verge of that being confirmed now, and I would suggest that that's already been discounted in. And if that's already been discounted in, there might be some profit taking, which is going to be bizarre. So you'll come out, and this is just a supposition, it's a hypothesis, right? But it's a scenario that I think we all need to be just thinking about. It's kind of like, well, the Fed comes out with a hawkish policy statement, and then there's huge volatility, the dollar spikes, and then fades and actually pulls back. And market participants are kind of left scratching their head. Well, why is the dollar pulling back with the Fed being so hawkish? And in that scenario, it would be because the hawkishness has already discounted in. The market's been preparing for it since September, because September is when we saw the momentum shift. Here's where it shifted. You can see there, so we shift from the flatter aqua to the steeper aqua, so we get a steeper gradient. Here's sort of the beginning of September. So the market was preparing itself for an announcement in terms of inflation is more permanent than thought. I think we can confidently say that now in kind of hindsight, but we always were questioning that, and that type of sort of miscommunication, dare I say that, has perhaps set up a buy the rumor, sell the fact potential. So just be aware of that. And if that's the case, well, then the euro will move up in the sort of short term, and then I think the discounting starts all over again, you know, and then we kind of get a another higher trough in that type of scenario, and then potentially another higher peak. Now, I just want to be very clear. I'm not telling you that is how it's going to play out. I have no idea how it's going to play out. Nobody knows how it's going to play out. But this is just a scenario I think you need to prepare yourselves for in case. So I hope that helps, Shadrach. But I think that's kind of a huge driver of Euro US dollar. If there's any other questions, please go ahead and type those in, and I'll just have a look at the DAX just before we sign out. And all right, so let's just keep an eye on our triggers. Okay, so the first hour is very murky. I don't know if we're going to get a bullish cross here of our EMAs, but if we do, the next step is that angle and separation and the movement to the stochastic, if we have any chance of this working out. Right, this is where we will conclude. Thank you very much for joining me this morning. Much appreciated. If anybody needs to contact me, you have my email address. Thanks very much, guys.